the next session. From finance to cybersecurity, from automation to analytics, from product engineering to AI transformation, GCCs today hold the steering wheel of global operations.
And that is exactly what this session is about. The rise of GCCs, redefining global business DNA. How India moved from processes to platforms, from execution to excellence, from cost to capability, and capability to finally global influence.
To take us on the journey, we have CA Abhay, Chartered Deputy Governor of the group, Mr. Giridhar Rajagopal, and CA Shreyas Kumar. May I now request Managing Committee member CA Sri Raksha to escort the session speakers and moderators onto the dais and present them a book and a life plan symbolizing the growth and sustainability to the speakers of the session and moderator of the session. Can we hear to the introduction of the session speakers? Let's give them a big round of applause. Yes, members, please give them a applause. Can we have the introduction of the speakers?
And I'm honored to introduce Mr. C.A. Giridhar. C.A. Giridhar has over 25 years of experience in the offshore GCC business across US, UK, Canada, and Australia-based businesses. Managed a 6,000 FTE GCC as country head for over 8 years. Currently president and country head of Sentient as Ascent company on the fastest growing public accounting platform firms in US. Top 25 in IPA ranking, set up AI ML based Indian research lab in insurance and underwriting. Was responsible for several key M&A transactions with the GCC, purchase, demerger, slump sale. Was the first 100 APA signatories in India when the same was introduced, was a key part of India's pioneering BOT transaction in the GCC world. ACS MBA in Finance with distinctions and qualified top of the class in the Business Excellence Program awarded by HAAS School of Business. UC Berkeley, California. Industrial recognitions. India Top 100 GCC Leaders in 2024, 3 AI Data Transformer Award in 2023, AIM Magazine Forbes Top 100 Award People Leadership, Forbes India Magazine, panel member in various industrial forms. So let us join our hands to welcome Mr. C.A. Giridhar.
I am Pratik Rao, and it is my privilege to introduce C.A. Shreyas Kumar, one of the speakers for this session. C.A. Shreyas is a chartered accountant with degrees in commerce and law, a master's in business law from National Law School, a diploma in information systems audit, an executive management qualification from Stuttgart, and an MBA from Chitkara University. He has over 25 years of experience and currently leads multiple roles. Founder and CEO of Atharvaveda Fintech, Group CFO and Digital Transformation Officer at Narayana Nethralaya, and CEO of IVA. His previous leadership positions include serving as CFO of Carl Zeiss India and SAC, Stanley, Black and Decker, Carshare India and Japan, and as a global head of internal audit at Karcher in Germany. He is also an internationally recognized photographer and a dedicated endurance athlete, among the first 3 Indians to compete the Paris-Brest-Paris 1230-kilometer cycling challenge. Please join me in welcoming CA Shreyas Kumar.
We now hand over the session to our distinguished speakers to enlighten on the topic.
Just the initial opening, Mark. Thank you so much, MOC, and good afternoon, one and all. So, excellent session first, which we had. Now we have a very interesting, I must say, a session that is reshaping the global business landscape, the rise of GCC, redefining global business. Very happy and glad we have two eminent speakers on the dais. Of course, Mr. Giridhar Rajgopal, Managing Director at Sentient Solution, whose extensive experience in strategic transformation and global operations offer invaluable insights into the next phase of GCC evaluation. And also welcome CA Shreyas Kumar, the Group CFO and DTO at Narayana Nethralaya, who brings a unique perspective on leveraging GCC-like models to drive efficiency, digital transformation, and strategic growth within a highly specialized sector like healthcare. So truly an opportunity for all of us to listen to the experts. I'm sure we have a lot to take away, especially in this session. I once again welcome, without taking much time, I think it's time to hear these speakers and get the insight from them. So thank you very much for all of you for joining, and welcome for this technical session too. Thank you.
Hello, good afternoon, everybody. You know, it's wonderful when you go for a pre-lunch session because I can increase your appetite for knowledge here, but really the appetite will take care of itself out there when, you know, ICI is going to provide a great lunch. So thank you for being so patient with us. And again, thank you for addressing me as CA. Unfortunately, I'm not. I'm a CS, but I promised my dad that I'll finish my triplet before whatever time. So I'm still awaiting that opportunity. So I'm so glad I'm here just a privilege. You know, not when I look back into my past, and I used to sit as a student listening to wonderful folks from the CA Institute teaching us accounting, taxation, and whatnot, and here I am sharing with you my 25 plus years of experience. Indigo, the name on everybody's mouth, especially if you've traveled and waited long hours in the airport. Now, there is something the media missed, maybe the Instagram memes missed. You're all accountants, tax professionals practicing and advising clients. What do you think they missed in this whole problem? What was it that this really taught us, this experience of missed flights, a whole operational snafu, as they call it? What was that one thing that, if you were to think about it from a CEO's perspective, a CEO of your organization or a CXO or a CFO? Cost of compliance, yes, but that's like I would say, a third or a fourth important issue. What's the number one issue? Customer experience, travel, one more. You're all giving me 2, 3, 4. How much of missed EBITDA you think is going to be there because of the missed meetings? How many people did not sign deals? How many deals got postponed? How many people probably didn't get a job interview done and didn't join on time because they couldn't become productive billable hours then? So the business cost of this outweighs everything else. We spoke about the emotional cost, the compliance cost, the client experience, our own experience. This is what a GCC is all about. So the question which I often have to answer, let's say tomorrow morning, the entire GCC is vanished. What happens? Believe me, America, Europe, UK, wherever it is in the world, will go through what we went through with Indigo. So it's not just about the journey. The journey is wonderfully captured, and I'm guilty of using those kind of same points. But the perspective that I want to share through some stories, and I've probably got about 10, 15 minutes to share these with you, is how critical Doesn't matter which layer you address, whether it is at a cost level or at an innovation level. It's like, the popular game Jenga. If all of you have played Jenga, you pull one, the whole thing comes crashing down. GCCs are like Jenga blocks. They're like layers of a cake or layers of something that you like to eat. It's built one on top of the other. And each layer addresses an important part of the parent organization. And what I'll do is I'm going to fast forward to some of my slides here because some of it has been eminently covered by my co-panelists in this session or the previous session. How does this move? Fantastic. Okay. There you go. Page down. If somebody, oh, there it is. So I'm going to this is an important slide I want to talk about. What's pride in ownership? What was the difference between what we call as GCC version 1.0 versus 3 or 4, whatever we like to think? 20 years ago, CEOs directly took interest in GCCs. They traveled to India. In GenPact, they came here. They saw India, oh my God, I can do stuff here. Today, GCC setup has become a level 2, a level 3 mandate, which means setting up of a GCC has come down 2 or 3 notches, which means it's become part of strategy, it's part of operations. It's no longer, okay, my God, I don't know how to do this. It's about, okay, here is what we are going to do. So the pride of ownership is coming down. Now, this is very important for us to know. When the pride of ownership of a GCC in India sits in the board, sits at level 1, then it's easier to scale and grow. But the minute it starts kind of coming down to an operational level, you're just another shop. So this is a number one risk in terms of today's version of the GCCs, what we call as micro and nano GCCs, which is why you're seeing the GCC footprint shrink. It's no longer about thousands of people. It's about, okay, what can you really do for me? What's that one thing you can complete in 6 months, 8 months? How many MVPs can you run out of India? How many AI pilots can you do out of India? Because it's really the CIO speaking. The CXO or maybe the CEO still doesn't even know whether the GCCs can do this. So this is very important that the pride of ownership is coming down in the parent organization, and this is something we have to think about. I just spoke about nanos to large. The previous success metric of a GCC is how large are you? How many people are you in India? Oh, 3,000, 5,000, 10,000, fantastic. Now that story is slowly eroding. Because again, we heard the story of a platformization, and I represent a GCC which is a platform, sentient. On this platform, we will build or we will buy. The ecosystem is totally fungible today. I can buy, I can build. That's why there is pride of ownership difference today. When I buy, I want to integrate seamlessly into the service. I'll buy a technology. Like if you're doing public accounting, I want to go to Wolters Kluwer's and buy a tool called CCH. CCH might have been built 20 years ago, but to integrate it with a modern AI model will be done in the GCC. So what does it mean for all of us? We should be open-minded to partner with anybody and partner at will. This is going to be another important mindset, which is where the nano GCC concept comes. Nano GCCs are these partnerships, which is why you're able to do GCCs at 50 people, 100 people, 150 people, and it's no longer about headcount. So this is an important that scaling, do not think in terms of, oh my God, number of seats, number of people. It does help your cost structure, which is where the cost argument exits. And it is about a value argument. I will hire an IITian at X dollars, but if I will not get that skill back in the US and Europe, I can get it in India, because this person knows how to take a 20-year-old operating system and integrate it with the latest AI model, and that's done in the GCC. This is very important for us to understand. As folks who measure value in this room, you have to look at value with a different lens. What does it create rather than what it costs you at this point of time? Dual transformation is my favorite strategy. It's a book. I don't claim any kind of expertise about coining this term. Dual transformation is If you look at the large GCCs, they have one thing in common. And if you look at the growth curve of a company, there are 3 stages, or 4 stages actually. There is quick founding, quick growth, then there is maturity, and there is decline. Most large companies, I'm sorry to say this, are in the decline stage of their operating model. You take any large company, their operating models are losing steam in the market. The CAGR is reducing year on year the revenue which is produced out of that model. GCCs are the answer to this. GCCs, when you expand in India, help you to perpetuate a new model, help you to create a new market, help you to create a go-to-market strategy for a new product, help you to create scale up a service, help you to create new talent. So what happens here is, this is called the dual transformation. So think of dual transformation as 2 mountains. You're already on top of a mountain, you are a market leader, but you are going to decline because the only way next is down. Now, how can you create another mountain without coming down this mountain? The second mountain is actually your GCC. And you're basically creating a bridge between the parent organization and the second mountain. So without having to come down, you can actually get on top of another mountain. So the capabilities we are building in the GCC, whether it is talent, whether it is AI, whether it is technology stack, whether it is creating advanced, complicated ways of handling new issues, like say quant, for example. If you want to do a quant role in India for say a JP Morgan Chase, it can be done in India while you never have visited Wall Street. So this is the transformation of the capability, what is called as a dual transformation. If you're interested, please go see the YouTube video on this. It's a book. It's a book which says how do you become top of another game when your existing game is on a decline curve. Leadership is probably the most important thing in a GCC. If you take everything else away in GCCs, you can still survive. But if you remove leadership, that's probably the biggest mistake anybody will do. Most GCCs fail because they do not hire the right kind of leaders. Leaders who are not growth-oriented, leaders who do not try to transform. And I have a very favorite guru. He's a chartered accountant, by the way. His name is Vijay Govindarajan. He's a Tuck School of Business professor in Dartmouth College. He's a chartered accountant, and he advises firms on strategy. He called something called a 3-box model. The first box is what you do today. The second box is something you know is coming in the next 2-3 years. The third box is a problem, because that's the distant future. That is something you have to start figuring out in 3 to 5 years, and you don't know what's inside that box. Leadership matters because of this box. GCCs do this really well. The leadership in GCCs have much more futuristic vision, I dare say, than some of the CXOs sitting in the parent company, because the GCC leaders are young. A lot of you can aspire to be those leaders because the average age of a GCC leader is coming down by a decade. The average age of a GCC leader is coming down by a decade. So suppose you are in your 35 and 36, you can be that cool 40 under 40. Right? So this is very important because you have the skills of solving what's in that third box. Somebody who qualified 30 years ago is going to struggle with it because it's a huge mindset shift, and they're not motivated enough to do that mindset shift because they're running a very good first box. Right? Please think about it this way. As future leaders, what are the skills you will need and what are the coaching you will need to become future GCC leaders? This is going to be a key ingredient of making GCCs, the market growth which is there. A lot of you have great opportunities here. Lastly, a strategic asset. Strategy is a fantastic word, but also a very abused word. Now, I can strategize getting through Bangalore traffic by saying, okay, I have 5 means to get through. I have BMTC, I have metro, I have a car, I have an Ola cab. And what's my fastest way of getting here? Everything will fail because Google ultimately rules. Because Google knows stuff I don't know. So strategy is what you don't know. It's not what you know. Now, GCCs are again excellent at predicting the unknown. Because again, of the collective experience. Now think about bringing together the entire business of the parent company in one location. Let's say this parent is scattered across 250 offices in the US, maybe across 6 countries, across 5 continents. the GCC becomes a single place where this whole talent concentration happens. There is fantastic leadership. There is ability to integrate and solve problems quickly. And more importantly, there is value creation instead of just cost additions here. When you bring all of this together, it becomes extremely powerful, and that's what you get as a strategic asset. The strategic asset is not the GCC itself, it's the convergence or the confluence of all of these features which come together to make a great GCC. The most successful GCCs are the ones who have integrated people leadership, strategic skills, skills about technology, skills about creating basically every business process out here. That's why it becomes a strategic asset. So really, this is really what I wanted to speak about. I'm going to leave this presentation. Some of the dimensions of measuring these GCCs models I've touched upon today. You have operating models, talent, digital, process, value, stakeholder management, scalability. So if we did this right from a practitioner's perspective, what I have learned over these 20, 30 years of, this is my 4th GCC outing, and the last 2 have been country heads, is it's hard. It's not easy. It's hard not because it is complex. It is hard because ultimately you have to make the right choices. If you look at, there are so many things to do. Like somebody asked about focus. You can do so many things, but picking that one thing which will create value fastest, create the fastest go-to-market strategy, create the fastest product is probably the one which is most valuable for the GCCs. So I'll kind of stop my speech here because I want to give you something to think about. As each one of you are working in a GCC or wanting to work in one, the one question you really have to ask yourself is, how open are you to shift your mindset almost on a daily to monthly to quarterly basis, because this is going to mean success for each one of you. So thank you for your time here, and I'm going to turn it over to my other colleague speaker here. Thank you.
Tech glitches happens also in a GCC, I believe. Hi, good afternoon. Maybe before we start, a question. One is, I didn't want to try and put people to sleep before lunch, so I'll stay away from the dais. How many of you are practicing and how many are employed? Generally, to understand whom I'm addressing, how many of you are practicing? So majority is practicing, right? And hopefully the others have been part of GCCs or want to set up a GCC, I don't know. So I'm talking about a very large topic, which is how to set up a GCC. Many years back when I had recently qualified and I'd been through some, I was probably the 3rd employee of a shared services set up in India. It was just coincidental, or serendipity maybe for a better word, that I was there. And we did a lot of strategy around setting up back office for this company, which did global tax structuring. Let's say you're a German, want to invest in US, or US wants to invest in New Zealand. So how would the setup be? The holding company would be in a tax haven mostly, right? And what would this mean? Somebody needs to manage the tax haven entity as well, because there'll be flow through of funds, maybe minimum transactions, but we set up something like a tally something as basic as a tally because we were managing thousands of entities. And we set this up, which eventually went on to become more than 1,000-member team here. And this is way back 2005-6 times. And was interesting then. So I have been fortunate. A couple of weeks back, there was a very interesting survey asking about what is the most, overhyped word in these days. And the survey said probably it is AI, right? Overhyped. I'll maybe take this a little further and say maybe the second most overhyped word today in the finance domain is GCC. Why do I say that? And what do I intend to convey by saying that is GCC something that is very far-fetched? Can all of us set up GCCs? Or can all of us aspire to be a part of something that sets up a GCC? And can I oversimplify it so that you don't feel it is too far away, that it is not achievable by each one of you, by a lot of you coming together, I don't know. So that is the intent I carry today. Because GCC at the end, the word has evolved from being just called as a BPO, right? Then it became a KPO, then it became shared services, then it took a lot of forms. And it took a lot of functions as well. So today I just talk about that. So I'll try to oversimplify it. It's a very difficult topic of how to set it up. I've been fortunate that I was a part of one of the setup teams at Zeiss. We set up the reverse order of what I would have liked. But let's see. Two things we all spoke about. I think the colleagues in the past spoke about captive GCCs where a parent company is setting up a GCC here. That's very, very clear. They have expenses, I think Giri just mentioned that the CAGR is going down, they need to do something about it. So they set up an entity in India, cost arbitrage, and we already spoke about it. This is long term, is very focused on what the organization wants to do. But what is good about this is it can be any function first. It need not be finance. It can be tech, it can be R&D. Mercedes started R&D before they started finance, right? It can be any order based on what you need. And it can focus on anything that the organization needs. But what is probably a lot more interesting to all of you is managed GCC or partner-run GCC. And when Giri spoke about nano GCCs, I found it a lot more interesting. I am going to take it further and say, if you build tech-enabled GCCs, a nano GCC is probably 5 people, which probably all your firms already have, right? You can take it that far. Maybe with a few clients, with a handful of clients, but with a lot of tech coming in between. So let's figure out what can we do to build it. But the foundations of both are same. You need very strong processes. You need very good discipline. You need to stick to what you promise to deliver, right? Controls, peoples, and of course, automation. I'm a very big fan of automation, so I'll focus on it every time. When it comes to us as the finance professionals, I would say it's easier for us to make it a finance-anchored GCC, right? And I'm still telling you finance-anchored, which means that you should also look for non-finance processes to bring into GCCs at a later point. But start with finance, because everything that you do in a company, it has to have a cost or a revenue repercussion, right? It touches finance in one way or the other. So there is nothing that escapes finance. So be the first phase, and you are all finance professionals. These are your domain expertise. You already have the expertise to start something like this. So I think you can start with the finance domain first and build, something, let's say, these virtual CFO services that are coming up, right? Why would you call it virtual CFO services or outsourced accounting services, and why not a GCC or why not a finance GCC? It's the same. That's why I said maybe GCC is overhyped. So when you're doing the same, and there was a question I think my friend asked here saying, can we service local? Why not? You have global capability. You can serve locally. There are large companies here which operate large shared services or centralized services rather within India, which have thousands of people handling their operations in India. So you can service Indian clients, you can service Australian clients, US clients, doesn't matter. They are global capability centers. That means you are building capabilities to serve the globe, but you can serve as locally as possible. And CAs have a natural strength after going through the grind. You remember our final syllabus saying, you know, expert knowledge in 8 subjects, right? After going through that grind, we understand controls, we understand the risk, and we understand compliance very, very well. So I think that is an advantage that we have, which we need to use to our strength. So for us, what comes naturally, where our domain expertise, where our credibility is very strong, is finance. So I would say, when you want to build something, within even your own office setups, start with finance as the first function to touch. Now, of course, when you're starting, there are multiple models that you can look at. We spoke about the captive GCCs, so you find, we'll figure out, the build, operate, transfer is a very, very popular concept in many, many big GCCs. If you talk about ANSR or you talk about Zinov, what they do is, they are very large now, they are Indian, and they are very, very large now. What they do is they set up GCCs for very large corporates globally, because they're not sure if this will scale up, if this will do well, if this will not do well, they're not sure. So they set up, and when the organization is sure that this is large enough, they transfer the whole team, they transfer the whole process, they transfer everything. So build, operate, transfer is also a good model that you can think of. So captive GCC is one, of course, where the organization is setting up directly. You can try to be a part of it, set it up for them and exit later. But if you can set up your own, but you can always go midway. You can set up a build, operate, transfer setup where you offer your client, let's say you have a Indian subsidiary of an American company whom you're servicing already. You offer them saying, why don't you think of bringing, and it's a small, small organization, let's say not even medium size, but small in US, right? Why don't you say, why don't we set up your GCC here in India? As you continue to grow in the US, we will support you from here, but the moment you're large enough or your account makes good sense, you can take that over right here in India. So this is a build, operate, and transfer concept. It works with speed because the client does not need to go through hiring, setting up a new legal entity, etc., etc. They leverage your entity. And the capability, because you have had staff who understand, you can hire locally, and if you build capabilities like understanding what the US compliances are or what Australian compliances are, and trust me, if you've seen, I've worked abroad as well as in India, and if you've seen Indian laws, you can handle any laws, because I find most other laws less complex than the Indian laws, right? So that is how you can think of. Now, coming back to the phase, which is the foundation, and I think another colleague of mine just touched upon, pick your strength, pick your strength. So let's say you have a good team that's handling payable accounting very well. Just start with payable accounting for clients. Don't do anything else. But trust me, what we need to focus on, and I know I will focus on a lot of automation here, but pick function by function, process by process, and say, I will only handle this. I will become excellent. There is a company called GCC, right? They have built an automation software for payables. Now, we are their competitors. We are their lesser known competitors at Arthaveda. But they claim to be able to manage your supply chain for you, right? Including negotiation somewhere abroad. Let's say you're buying crude oil for some small purposes. You're buying plastic for something. They say that I will go to the real GCC, which is the Gulf, the oil nations, and they say we'll go and negotiate on your behalf. So they are offering, only in supply chain management, they are offering a GCC capability. So the world is very, very large. I think it can be as large as you want to see it. Then you can pick billing. Today, look at tech companies. Billing can be extremely complex. Some are based on hours, and for the same client. We are not even talking about different clients. One client can have, he'll be servicing one customer who has billing based on number of hours that you work. The other is based on number of transactions. The third is just based on something flat. It's extremely interesting for you to note that there is so much of complexity here, right here within. You can pick a process like this and say, I'm going to automate a lot of this. There are products available in India, abroad. I'm going to pick one of them, automate a lot of this. And I liked what I think Suhail spoke about augmented intelligence. In finance, we are all very, very specific about 0.00, right? At least 2 digits. We are very specific about how accurate we are. And there is a necessity for having a human in the loop. This is a high necessity in finance processes. It cannot be just artificial intelligence. We build AI products for automation, but I can very, very clearly tell you that it does not work on its own. We need augmented intelligence. We need people behind the scene because there are going to be a lot of exceptions despite AI, right? So pick functions like this, whether it is reporting, whether it is your month closing, your financials, vendor onboarding, the KYCs, I think one of us spoke about, tax filings, whether in India, abroad, there are a lot of scope to do. Pick a few which you specialize in and try and see how you can pitch it to organizations. You can start with the Indian subsidiaries of multinationals and then say, hey, why do I not do it for your parent company as well? And trust me, the doors are open. I know tier 2, tier 3 cities in India doing fantastic work, having 100, 200, 300 people just doing accounting for global companies across the world. And there are multiple ways to reach out to. So as far as you're concerned, this becomes your GCC offering. You need to package it really, really well. You need to pitch it really, really well. And post this, and here I want to tell you that please be open to it. It is bringing things together should be a specialization. You probably have clients in every field of this where you will have a call center, which is your customer. You have IT services, which is your customer. Maybe you have supply chain management companies, which is your customer. See if you can bring them together to offer more services to these GCC clients. First, you can look at outsourcing it within yourself, integrating it for your client, and then, of course, setting up the function itself. Don't restrict to your client. Because what, at least in my experiences, people don't like to go to multiple places. They don't want to go, I will go here for finance, I'll go here for supply chain, I'll go there for customer support and call centers, and I'll go somewhere else. People don't want to do it. They want, single stop shops. They don't want to go to multiple places. So eventually we'll need to figure out how to bring in the other functions. We can, of course, start off, finance is a good start, but don't restrict yourself there. Be open to collaborations. I think the world of competition is more or less, coming closer to an end. This is a world of collaborations. We need to figure out how to collaborate with each other and how to figure out how to get the bigger pie rather than fight for a small piece in the finance space itself. We should focus on that, and therefore we can be a lot more, we can add a lot more value to our clients. And I had been fortunate enough. So at Zeiss, when we started, IT services, SAP support came first because that was this was an in-house thing. I was fortunate enough to be a part of it. IT services came first. Second came product R&D, which was very, very high tech. A company like Zeiss is a very high tech, high-end product company. And what came next was product R&D, came to India. Of course, those days, India was not given any recognition, any patents, even if something was entirely developed here, but that has changed now. With the GCCs coming in, with the good capabilities coming into India. So people even have a lot of patents today when it is their R&D, right? And then supply chain came, and I was fortunate enough to be the part who set up finance automation first. I set up the Global Finance Transformation Office, and then also went on to set up the finance processes itself, which were outsourced to India. But this can be any order when you are setting up what you want to set up, right? But I would always encourage all of you to think beyond just finance processes. You should not compromise on certain things when you think of starting a GCC, when you're setting things up. Of course, it can be investment heavy, it may not be investment heavy, but the initial process is where you need to, like IT security, nobody is ready to compromise on IT security anymore. Right? If you don't give security, the clients won't come to you. It's as simple as that. They'll say, okay, I'll give you data, you do whatever you want, give me the report back, I will not touch your IT systems. you want to become a GCC where your client data is handled, you will have to ensure that you are set up with the right infrastructure. It could be just the place where you have set up the company because you won't find talent if you go to the wrong place, or where the office is because people don't want to travel 3 hours to and fro every day. And this could be a lot of this, right? So when you talk about IT security, please take care of that. The IT infrastructure, do you need dual monitors to make it easier? Because a single monitor is making it inefficient. And that also means your capability to handle a lot of more volume comes down. It could be things as simple as that. And if you're servicing US clients, if you're servicing Australian clients, time zones, what you work upon, can women work in those shifts? Where will I have the shifts? Can they use the same IT infrastructure? These are all questions you need to ask yourself, strategize for it, and set up before you go ahead and set up the GCC itself. People, I think somebody just mentioned a few minutes back, is the most critical layer of this, right? So we need to ensure that the right people are on board. It could be us hiring somebody who's already worked in a GCC environment, or it could be just our existing teams that scales up. But communication is very, very important. You're talking to clients, probably as a global capability center, you're talking to clients across countries. If you're talking to a Spanish-speaking country, though in English, it'll be with a very strong accent. So if you don't have the right team who understands this, you will struggle to communicate. So these are small things that small nuances that you might want to think about. But the core finance talent is all of us basically, and that is already available. Now, when you go to the operations side, what you need, do you need tech talent also to be a part of it because you want to automate it? You want to have a lot of IT talent. Pay attention to communication, pay attention to how you set your processes up and ensure that it is followed very diligently. And cultural sensitivity becomes very, very, the monkey gate that happened in Australia, right? Harbhajan called somebody a monkey apparently, but calling somebody a bandar or a koti is very, very common here. It's not a big deal. But these are culturally sensitive issues. I mean, a small thing can backfire when you're handling a global client, and it could mean that you don't have that client anymore. So this sensitivity also has to come into place. And be organized at work, use the SOP and and just the basics is what I'm talking about. I'm a big fan of this, like I said, automation from day zero. When I handle clients, when I have built my clients, I probably need 1/3 and maybe 1/3 to half. I need 1/3 of the manpower that a normal firm needs when we do outsourced work or when we do simple accounting work, because I use automation. I use automation to a very, very large extent because I don't want, let's say I onboard a client tomorrow. I don't want to hire 3 more people extra after that and train them fresh. It's going to take a long time. But if I have automation in place, right, the scale up is a lot more faster. The processes are a lot more stable, and the guarantee that I can deliver what I promised the client is a lot more possible. So that is what I would say, is look at automation, because we use, for example, an AI-based procure-to-pay automation tool. It completely eliminates your manual data entry. But again, I told you, human in the loop to validate it. We have a vendor portal where you don't need somebody calling you saying, hey, where should I enter this data? Where is my purchase order? Where should I submit the bill? Oh, the bill is gone somewhere else. Have a vendor portal, and your entire vendor management is simplified. And these are things, tools you can use when you're servicing your procure-to-pay automation to your clients. And reconciliation at scale. Imagine e-commerce companies. So Noon is an e-commerce company in Dubai. They have recently launched many payment gateways that they use. Payment gateway deducts a fee every time they transfer money to your bank. Your bank, payment gateway, and your books are never going to match automatically. That needs to be matched. But imagine 1 crore transactions per day. How will you reconcile this manually? You will need to go for tech solutions. And when you go for tech solutions, suddenly you have cracked a very large client very easily because they don't have a solution in-house. So this is where I encourage you to look at tech as a solution, whether you build it in-house, which is not the capability of every firm, but you can look at the market. The market has very, very good tools,
and do a hybrid approach. Don't do a single approach, whether it's tech only or people only. I would always recommend that you do a hybrid approach. So don't build the GCC for the number of staff you have, but ensure that the automation augments it so that the bots can manage any growth that you want to get. Simple 5 steps as I end, right? Choose the right operating model, build, own, transfer your own, or you want to be a part of a global setup. Choose that. Build your finance core because that is what is core to you, right? Infra and security, don't compromise. If you compromise on that, you lose the client, they don't come back again. The talent, the people is not something that you can, of course, ignore. You have already realized that even as you service your clients now and automate and expand, it's a lot more easier to do that than doing it either only manually or either automated, because both won't work. You need a hybrid solution. So with that, I think that we can all move from just the auditor role, just the accountant role to a lot bigger role of GCC architects. The scope, the availability, you know, Mittelstand companies are mid-sized companies in Germany, which is 1, 2, 3 billion. That is the size. And they will be very open to coming and partnering with India, for example. Germany is very open to India, and I know that for a fact. So we have to build the trust, of course. And that is the most important factor that we need to build when we want to get them here. We as smaller service providers can build large companies, can build large solution companies. And that is not a problem, I feel. The problem is we being to envision that we can build something as large. And that is the only thing probably that is either going to be, that is going to happen or be your constraint, is how large do you think you can become with your existing capabilities. So that's about it from my end. Thank you very much for...
Thank you. Thank you very much, Girdhar. Thank you, Shreyas. I think big round of applause for both the speakers. Very specific, I think was very important session we had, and I'm sure the members, participants would have really benefited with, you know, the insights you shared about it. So before I ask the audience for maybe a couple of questions, but I think I just have a couple of questions from my side which I can ask, maybe, you know, may not be repeated by the audience if they have the similar ones. Of course, Girdhar, you spoke about, you know, the pride and ownership, transformation. You spoke about, yeah, this you can, you talk about the value creation. Shreyas, you spoke about the automation, the talent pool. I think, you know, the technology, these are some of the important factors for the GCCs. So, Girdhar, quick on one question with you is, with digital transformation accelerating, what skills or capabilities should GCC focus on to remain relevant and competitive globally?
Absolutely. So digital transformation is, as you know, you again heard another speaker speak about a digital twin. A digital twin is nothing but a virtualization of a physical service. So if you had a machine, now that machine is actually sitting in a computer. So your AI models are all basically virtualizations. As practitioners, as I saw a lot of folks put their hand up as practitioners, I think it's very important to know how a model is built. How does an AI model build? Like, I'm sure all of you are using what is known as LLMs, the large language models, ChatGPT, Claude, whatever it is. How does this work? Like, how would you value something like this? Imagine if your client wants to build an LLM, which is what is known as close-ended, which is within their organization. And they call you and say, hey, what value should I place? I didn't spend any money. I just bought an open source model, put it into my cloud, and then it started learning by itself, because it is that's what agentic AIs do today. What do these jargons mean? How do you bring this together? How do you create a valuation model for something like this? And obviously, you know, we look to professional bodies like ICAI to provide guidance, but what can you bring to the table saying, okay, here is how we should look value here. Now, value will also mean, remember, you have to value this as an asset if this company has to sell and buy this as an asset. We are used to valuing plant and machinery, we are used to valuing buildings, but how do you value these models today? What will companies buy and sell? So think through this as one of a skill that we will have to develop. We don't have to understand the tech itself, that's not our understanding. But then suddenly your CIO is going to be your best friend, because they don't understand finance as much as you do, and you'll probably not understand all the layers of code which goes into building a model. Just an example to see some new skills which you can develop in terms of understanding tech, but in a way that how does it fit in an M&A world, for example, at this point of time.
Thank you very much. Thanks, Girdhar. So, quick on you with Shreyas, in terms of, in your view, how important is cross-functional collaboration between finance, operations, and technology teams within the GCC? Since you've been involved at various positions, I'm sure you'll be able to give insight on this.
Well, I think cross-functional collaboration is a part of life, whether you're in a GCC or in an organization or your own organization, right? So that is something that you cannot do without. And the better it is, the smoother your GCC setup is going to be, the smoother your GCC functioning is going to be. So whether your finance interacting with IT, whether your finance interacting with supply chain to understand their needs, and if you're leading the setup of the GCC, then understanding everybody's needs when you set it up, because you cannot ignore one and set up the other. No organization succeeds. So I used to describe it as a one-winged bird, If, let's say, sales is very, very strong, but all your back office functions are not strong, that's a one-winged bird. How far can it fly? It's going to spiral down at some point of time. You need very, very strong wings on both sides. So that means all functions need to collaborate and be equally strong as well.
Correct. I think that's very important. So, quick on, Shreyas, on that part, on the, being, experience in the healthcare sector. Strategies have found effective in attracting and retaining top talents in GCC, especially in niche areas. So what do you, think about those strategies which are relevant, especially in domains like healthcare?
I think retention is a challenge these days for all of us, irrespective of the domain, and has been the same. And since GCC is currently a much fancy thing, I think hiring is today a lot more easier than it used to be. But it may not stay the same. I think so. We need to ensure that. And today there's going to be poaching from the newer setups. They're going to offer better salaries and better, facilities at office. So treating your people well is is mandated in any organization, whether you're a GCC or not, and that will build your organization culture, and that will also build longevity of processes, how these improvements come, and so on. So that, I think, is anyway mandatory for every organization.
Yeah, correct. Thank you very much. And when you asked about how many into practice, a lot of members I saw has raised their hands there in practice. So, and quick for both of you, like me being a layman in GCC, of course not aware. So I want to enter into a GCC. So what quick advice to young professionals, especially, would like to give you in 15 seconds, that what they should just keep it in mind, or how they can, enter into a GCC as an advice you can give it to them?
No, like I said, I spoke about how to build a GCC. This is exactly what you can do, is find out the gap in the market, find out the market you can try and impact. If you have to travel, let's say, to exhibitions, to trade fairs, which talk about similar topics, please do so. I think that's an easier way to assess the market capabilities, market requirements. I mean, this is probably one such forum as well. And then try and see how you can structure your setup to feed this market. Because the market gap assessment is probably one of the most critical things you do here. Otherwise, you'll set up something where there are too many people, and then you'll say, oh, we did this, but it didn't work. I'll probably take another minute and give a small example of an experience I had just a few weeks back of a new client of ours. So they went to a very famous actor and they said, you have a lot of brands, but there is no suitcase brand. Can we take your brand and set up suitcases, manufacture suitcases with it? They went to a factory that manufactures suitcases for a very, very large multinational company, and they said, can you manufacture for us? We want good quality. And then they went to Flipkart, one of our top e-commerce companies, and then they said, we have this brand and we have the suitcases, one of the best qualities. Can you give us we will give you an exclusive sale. Can you buy from us? This was tied up. In 5 months, their monthly turnover rose to 25 crores. In 5 months, 25 crores. This market gap assessment is very, very critical. And if you figure that out, because the market is very, very large, today it's not saturated, it's not full, it's far, far away from that, because there are still a lot of small and medium-sized companies abroad which will still come to India. And given this, try and assess that gap and figure out where your niche is.
Yeah, I think very, very well said, I think. So, I think we can take up one or two questions from the audience. I think I have got the hand raised from the 6th row. If we can have a mic. Mic up.
Thank you. My question is to Mr. Shreyas, because you simplified the concept of JCC. My name is Mazhar Avedin, and I am the founder of MS Global, which provides transfer pricing services. Okay, so we also give our services very much in GCC model. We don't call ourselves GCC. Maybe you have to redesign that. So, what is your advice? Should we just continue servicing on the TP specific, or should we also expand to other services? As we said, client look for all the services at one place. Okay, so just for your context, we provide these services to global firms, consulting firms, as well as direct to corporates. Yeah.
So that's a soft corner for me, because I started my career in KPMG in transfer pricing, or call it international taxation maybe. So you have a domain expertise which you're already exploiting. The most difficult thing that you have cracked here is to acquire clients. You already have clients, but the clients have more needs than just transfer pricing. And they have your trust in certain matters where your domain expertise already exists, right? For existing clients, cross-selling more services is a lot more easier, because they trust you and you already have them with you. I would say look at adjacencies in other matters of tax to start with, and then you can look at other things as well. If you're open to it, I think you should expand, nothing like it, because the first and the most difficult part of getting clients is what you've already cracked. Adding expertise, whether you even collaborate with another firm, but you front-end the relationship, adding expertise is a lot more easier, and you should control the quality of delivery. That, of course, is non-negotiable. But I think you can expand and become a true GCC, whether it's a tax GCC, whether it is all functions, I don't know, that is up to you.
We are on that path, and we already have covered more than 80 countries so far, so doing good, yeah. Thank you so
Congrats.
much for your answer. Thank you.
Maybe one more quick question.
Yeah, my question is to Mr. Shreyas. It is around automation. I think since especially we see the salaries of chartered accountants going up, automation is very important. My question is, how do you envision to build an automated process flow? How does it start? And how do you look at those quick wins when you look at automation per se? Because we have a dream of automating many services, but we don't know where to start. And also, how do you look at it from your own firm perspective and also automating services for your clients? Thank you.
So I fortunately have the good fortune of having a very, very capable tech co-founder who used to do AI for Microsoft and so on. But besides the point, I code myself. I learned coding when I was with General Electric, and we had 70 people managing accounting in Excel because Oracle implementation had gone for a toss, and we had to improvise, otherwise we wouldn't survive. So it was a question of survival. If it becomes your question of survival, I think you will also solve it. But the problem I found with CAs generally is we run away from tech. We say, okay, maybe not our plate or not our cup of tea. So we run away from tech. I think we've had many sessions, even organized by the Institute, which teaches you how to do simple automations. Because today, like he said, the coding is already done by a lot of AI platforms. And the platforms are just getting better and better. And what you need to figure out when you service clients with this technology is where the data is hosted, what is the security and all that. That comes as a challenge, but it is also reasonably solved. I would say first step, try to look for products. Second step, try to get them customized to your need. Third step, try to hire tech talents who can quickly build this for you. So these are 3 steps that you can easily take. So find products that serve your purpose and then try to build on that as next steps.
Might I add something?
See, couple of areas of opportunities for accountants is as you're doing an automation pilot, let's say you're an accountant in AP, and AP is getting automated through, say, extraction of data. Typical success rate is about 30 to 40%, which means 60% of the data fields, the system won't get it. And with AI, there is something now called AI hallucination. AI hallucination is it assumes it is right and pushes it as if it is right. Now, this is an excellent opportunity for accountants because we really dwell in what is correct versus what is wrong. The black and white is very good for us. So AI hallucination is going to be a big problem. And it is happening. That is why you get nonsensical results sometimes when you give a set of data points. So one is that opportunity of what we call as reinforcing the AI. The other is redesign the process. Now, a lot of us should not stick to that process. I think, again, as accountants, as professionals, we are very good at designing process. So this is a good opportunity. Let's cut 40% of the process time right now. I'm taking 20 minutes to do something. How can I do it in 10 minutes? So you'll need less people, but the fact is you'll be able to do more. And people will suddenly have a new skill of process redesigning, creating AI model testing, etc. These are new roles. These roles don't exist in the market today, but they are going to happen. This is only happening in the large organizations, and as we distill down, and these are going to become everyday roles, even in your own firm. You could tomorrow start a team which is, you know what, I will send you 5 accountants just to test your AI model, and it's a billable service. So please think about these kind of new age areas which you can actually offer as a service which don't exist today in the market.
Right. I think what he mentioned are two different things. One is workflows. Workflows are very easy to build using any random tool that you pick up from the net and build. Workflows are not challenging here. And even if it goes wrong, instead of sending something to you, it sends something to somebody else. That can be corrected quite easily as well because the error is very apparent. The problem he said is with the builds of the products itself like AI. For example, for the procure to pay, OCR is a challenge. It can hallucinate. But for that, what we did is we built a 3 LLM extraction for the engine because one LLM can hallucinate for something, but all 3 LLMs hallucinating for the same thing is not, literally not possible. And if that happens, anyway, the human will also most likely get it wrong. So workflows, which was also your question, you can automate workflows very easily. There are so many tools that you can use to automate workflows, build your approval matrices so that you're faster, and so on. So I think you should try and see how the workflows, and workflows are your domain knowledge. They cannot be taken away from you just by any random product coming into the market, and that is yours. So you need to look at what are the processes you need to set up, how you can automate it, like he said, and build a workflow around it, which you can build yourself or have it built by at quite reasonable cost by anybody who's competent.
Thank you. I think a big round of applause again for Giridhar and Shreyas. And just quickly on the scaling up, and we spoke about the locations. The Germany spoke about, Japanese he spoke about. So just to share some of the, in fact, one of the important initiative which we have taken from the WTO is making our members and students learn languages. So we started this year in January 2025, and 7 languages we have added in our WTO where we are teaching members. So we've already done batches for German, we have done for Spanish, we have done for Japanese. Almost 600 members, students have learned Japanese. Just more important, how you can scale up, upskill yourself, because an investor or an opportunity coming from Japan, you'll be the first one you'll be looked at and would be an opportunity for us. So business English also is something which we have made you learn French. So there are 7 languages. Anybody interested? We are starting the batch of German. We are doing for the Spanish very soon. So this is again something where you'll have to add in the capabilities which you have. So this just thought maybe was be important. We'll share. Once again, thank you, Giridhar. Thank you, Shreyas, for an excellent session. Nobody moved. I think in the entire session was tremendously well. And over to the MOC. Thank you very much.
Yeah. Thank you, sir. Now I request our past chairman of Bangalore branch, CA Ravindra Kore, sir, to present a memento to our speakers and moderator for the session as a token of appreciation. Let's give them a big round of applause. GCCs are not the shadows of the global companies. They are the spotlight of the global excellence. With this thought, we will conclude this session. Thank you so much, sir.